Welcome to the investment markets overview for the week ending the 10th of June 2022. Joe Biden is fast becoming the most unpopular president in history, particularly when it relates to his handling of the U.S. economy. There should be no surprise, given the continued gaffes, or damn right lies, such as a recent quote. The strengthening U.S. economy is supported by the high savings rate. Really? The personal savings rate spiked following the ridiculous and irresponsible stimulus packages announced following the shutting down of the U.S. economy in reaction to COVID, but that was 2 years ago. Since then the savings rate has collapsed to a 15-year low as the electorate struggles with the cost of living crisis and far higher interest rates. Most of which can be blamed on Sleepy Joe, other policy makers and the feckless and equally irresponsible central bank. Remember, the debt created remains whilst any short-term benefits are long gone. The overview includes the performance statistics for the main stock indices, which were mixed, as were the cryptocurrencies and commodities covered. Whilst sovereign bond yields were higher across the board, particularly the UK 10-year, which is effectively the mortgage rate. Note also, the continued strength of the Russian ruble. Meanwhile, our regional coverage includes comment on the ballooning US credit card debt, just in time for APRs to start moving much higher. A socioeconomic observation on the London prime residential property market. Whilst out east, it's of no surprise to us why the Oz central bank hiked rates by more than forecast. Days after the World Bank slashed its 2022 global growth forecasts and a month since the International Monetary Fund did the same, both incidentally blaming Putin, the Paris-based OECD have revised their forecasts also. And, drumroll, they have warned of rising inflation. The gloomy outlook reports an average inflation rate of around 8.8% across EU's 38 member countries, up from 4.5% just last December. Furthermore, they indicated high inflation is the hefty price to pay for the war in Ukraine. These financial institutions should carry a health warning in respect of misleading reporting and in particular of cause and effect, the latter of which is often factually explained within these overviews. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A one-month trial of this 40 times per year publication is available for less than $15, a whopping 70% discount. It's an ideal opportunity to grab the bargain for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview. Just follow the links provided, and if you're watching this on YouTube then kindly give it a like as it helps our channel.